Hey, everyone. Welcome. Happy Monday. Hope everyone's doing well today. Hey, Naomi, welcome. Thank you for joining us live. So this morning, we're going to talk about tax, which I know is everyone's favorite subject. And you're probably rolling your eyes right now if you are watching us live here. But this is an important conversation because in case you forgot or you never knew, or you still think it's March because it kind of feels like March, taxes are due on July 15th. This is for pretty much everybody if you are an individual, if you are a small business. And this is extended. This is the extended date. Well, let me take that word back. This is the rescheduled date from April 15th. Morning, Jenna. Thanks for joining. So April 15th is obviously the tax deadline every year for individuals and like LLCs and stuff like that. Not for corporations, not for C corporations. We're not talking about those today. So April 15th rescheduled to July 15th because of the COVID-19 pandemic. Now, one thing up front, just so you're aware, there is still the ability to extend. So in a normal year, when taxes are due, your tax return and your tax payment is due on April 15th, you can actually extend that through by 6 months to October 15th. That is still an option. You can still do that extension to October 15th. So hold on, I got to get comfortable. So if you don't feel like you can get everything done by July 15th, which is like 9 days away, you still have that option. There's a form. It's a fairly simple form. I do recommend you make a payment if you think you're going to owe some money so that you don't pay fines and penalties come October. Oops, what was that? We don't want that loud noise. Hold on. Okay. And I know what that is. All right. Anyway. And so, so I would recommend you do that if you don't think you're going to get it done by July 15th. But today we're going to talk about what to do if you're trying to get it done by July 15th. I've got some last minute tips for you. And I'm also happy to answer questions. So if you've got questions, throw them in. Now, I'm not an individual tax expert, but I'm usually pretty good at navigating this stuff. So even if I don't know the answer right off the top of my head, I can definitely help you figure it out. Here's the first thing, and you're going to groan when you see this tip because it's one of those tips that feels super annoying and everybody's like, yeah, duh, whatever. But this is so important. So my first tip is to actually take the time to organize your records. Here's what I see happen way too often with people in my community is tax time, like they ignore it. And then all of a sudden it's like rush, and do it all at the last minute. And the problem with this, I can almost guarantee you, the problem with this is that you're going to miss something. Now, sometimes it might be something that could down the road come back to bite you. So for example, if you miss picking up some income and then you get audited, you might end up owing more money because you didn't pay taxes on that income to begin with. So that wouldn't be good. But also it can be missing opportunities to save money and to pay less. So for example, missing expenses or deductions or missing other like tax credits or whatever it may be. So there's a lot of opportunities out there. And I'm telling you, even when I do it, like, all right, full disclosure, I'm going to tell you what I did this year, which is probably not the smartest thing in the world, but before the tax deadline was extended, so before they moved it from April to July, and it was right around the time when they were talking about stimulus checks going out and all of that, right? Now, this year, I happen to get a refund, which is very rare for me. And I'm actually do not support people getting refunds because if you're getting a refund, it means you've paid too much money into the system in most cases. So normally I'm really against refunds, but because of some sort of things we had come up this year, because of some last minute things at the end of the year, we were able to have some pretty good tax savings that just hadn't been anticipated earlier in the year. So a refund was in our plan. So we were going to get a pretty good sized refund. And I was worried that with everything going on with the federal government, that refunds would get really held up, with them trying to issue stimulus checks and frankly, trying to issue refunds for everybody because the message was, even as they were starting to talk about extending the deadline to July, the message was, but if you're due a refund, file now so you can get that cash in your pocket to help you get through COVID, right? So I kind of rushed to get our taxes in. Like I did it the way I never, ever have done it. I did it the way I never recommend it to you, which was I basically sat down one weekend and like busted it out. And you're going to see one of my tips later is why this is not a good idea. But I busted it out and I got it done. And I'm going to be honest with you, I missed stuff. And you want to know how I missed stuff? Because literally that like I filed, I think on a Sunday night. That Monday I walked into my office and I was like, all right, I'm going to organize some paperwork because I felt so relieved. I was like, oh, I got the taxes done. I feel so good. Super excited. I walk in, I sit down with this big pile of stuff to organize. And lo and behold, there were like 5 tax forms in there that I honestly thought we never received. I was like, that's weird. I can't find them anywhere. Thought I never received them. So basically didn't end up taking I was like, oh, well, it's not huge amounts or whatever. I don't think like it'll be fine. It was a pretty big difference. I think it ended up saving us like $500 in taxes because what I did do is I went back in and I amended our return like literally the next day, which made me look like an idiot. Like Sunday night I filed, I feel good. Monday I'm like, whoops, just kidding. Let me change it. But my point still stands, which is that taking the time to organize your records is really important because it makes sure that you don't miss stuff like I did. So a couple of questions real quick because I don't want to just steamroll past these. So Jenna says, what about June 15th quarterly taxes? They are due July 15th as well. That's correct, Jenna. So thank you for bringing that up. So basically April 15th, which was Q1, and June 15th, which is sort of quasi Q2, those got pushed to July 15th. My understanding is from here on out, the dates are the same as they always are. So yes, April and June's quarterly payments, you have until July 15th to pay. And then from here on out, we kind of go back to the regular schedule. So great question. Naomi says, I don't have my records locked and organized. So I opted to file, expecting to file an amendment once I sort out my medical records. Was that the wrong move? So not necessarily. This is kind of I'm going to infer some things, without asking you a million questions. This is kind of a unique situation, I'm guessing, where I'm guessing you probably had a reason why you wanted to file. Maybe it was to get that cash from a refund or whatnot. And so you went ahead and did it and kind of knew you were going to get an amendment or you were going to do an amendment down the road. Here's the thing. So if you're in that situation where for whatever reason, and maybe it's right now, maybe it's like, okay, I have 9 days till July 15th. And I feel like I need to go ahead and file, which again, you don't have to. You can always do the extension to October. But let's just say you decide you need to. If you're going to do that, I just want to make sure that number one, you do not put any numbers on your return that you are not confident in. So don't put any deductions on there that you can't prove or you don't have the receipts for or you don't remember the number. I don't want you to put anything on there that down the road, when you do file that amendment, your number was wrong and you're actually now going to owe more money. Because the thing is, if you do that, I mean, first of all, why would you file the amendment if you were in that situation? But if you do end up doing that, you could potentially pay fines and penalties. And remember, even if you don't file an amendment, they can always audit you. So that would be my only thing is if you're going to file with not all of your information, presumably, and it sounds like in your case, yep, exactly. I was just going to say in your case, it sounds like what you didn't include would help you in the future. So totally get it. I think that's fine. Here's the thing is just make sure you stay on top of that. Because and I'm totally forgetting is it 3 years? I think it's still 3 years to do the amendment, but you don't have forever to do the amendment. And candidly, I wouldn't push it out too far. This is more of a gut thing than like a CPA rule, but it just makes me nervous the longer I wait from claiming something. And again, this isn't like a rule. This is just like me with what I've seen with clients and what I've seen with the IRS getting suspicious about stuff. And I also wouldn't wait, and it doesn't sound like you're doing this, so this is not directed to you, but I also wouldn't wait like 2 years from now if you're like, oh, wow, I made a ton of money and I really want to offset my income. And you're like, oh, right. I remember I had those deductions I never took. Like that always is kind of, you can do it. And don't get me wrong, when I was in corporate, that's what we did for a lot of clients is we'd go back and look at some years and say, did we miss anything? Is there anything we could amend for? So you can definitely do it. But as you can imagine, the IRS is going to go, oh, look, her income really jumped up this year. And it's interesting. She's amending past years. Kind of makes it suspicious. So my point simply being, I would do it as soon as you're able to do it as soon as you have the information. Don't wait. And just get it in there. And I think that's perfectly fine. But here's what I don't want to have happen. And this doesn't sound like your case at all. What I don't want to have happen is you rush to file because you just didn't have your shit in order and you miss stuff because you're rushing. It's okay if you make a conscious decision, like I'm going to file now and then come back and amend because I haven't received this documentation yet. That's okay. But I just don't want it to be a decision you make because you're rushing through. So hopefully that makes sense. Yes, Naomi, I think you're good. You trust the gut rule. Like it. Girl after my own heart. Okay, next one. Don't wait until the last minute. This is kind of along the lines of the last one. But I mean, look, and it's so funny because my dad does this. My dad, bless his heart. And he's a very organized guy. Like he's a very with it, very responsible. Like he's the one person who can do this. And you know, it's not an I told you so. But he will literally wait till like the weekend or like the night before. And I think he likes the thrill of it, to be honest with you. But this is not a good strategy. And there's a few reasons for this. Number one, like Naomi and I, you might find that there's missing documentation and you realize, shoot, I need to go dig that up. Or you might have a question about something, not sure how to handle this situation, and you need to be able to ask someone. I literally, it's funny, the very first client I ever had in this business was, and I was at the point where I was just blogging. I was blogging about money stuff. I wasn't making any money. I didn't even know what I was going to do in the business. Like I wasn't sure if I was going to do education or if I was going to do tax returns. I just didn't know. And I literally had this woman reach out to me. It was like the night of April 14th. Or maybe it was even like April 15th. No, it was the night before. And she was like, oh my God, I'm freaking out. She's like, I know you talk about tax all the time. I'm on H&R Block right now. I'm trying to figure out how to do this stuff. I'm getting stuck. I don't have this. I don't know how this works. And literally I was like, all right, for whatever I charged her, I'll hop on Zoom with you. And we just walked through it. And she was lucky. She was lucky I was free. It was like 8 o'clock on like I don't know, whatever night that was. But that is very unlikely to happen. So do not wait until the last minute. Super important to leave yourself enough time. I honestly like to start doing my taxes about a month out. Doesn't mean I'm going to file a month out. It means I start them a month out and then I kind of come back to them. Now, which I was going to say, this is like my last tip, but I'm going to move it here because it's appropriate, which is prepare your taxes, take a break, and then come back and review them. I think this is so important. Let me just tell you how many times, and I'm good at this. I'm a CPA. I know what I'm doing here, right? But I will literally prepare them and then I will take a couple of days away and I will come back and review. And I'm like, oh my God, what was I doing? What was I thinking? Where did I get that number from? So trust me on this. Do them, take a break, like a day. I mean, if you can, a couple of hours if you can't, but hopefully a day, a couple of days. I wouldn't go too long because you don't want to forget everything. But a couple of days and then come back and look at them. And I promise you this is going to make it so much less likely that you mess something up or you've missed something. And it's going to allow you to really review them with sort of a fresh perspective. And speaking of reviewing, I know people get really overwhelmed by this. And I talk to people who are like, I don't review them. I just press submit and hope for the best. But here's truly what I need you to do when you review them. There's at least depending on how you file them, if you do like an H&R Block or a TurboTax or whatever it is, they usually give you a summary sheet. And this summary sheet will typically say something like, here's your total income for the year, here are your total deductions, here's what you paid in, here's what you owe, et cetera, et cetera. At least look at those numbers. And look at that revenue number or that income number and say, does that make sense? Like if you know you made $100,000 in your business and your revenue is only at 80, you're missing something. Similarly, on the deduction side, if your deductions are, if you know that you spent 40 grand on expenses, but you're only showing about 20, what are you missing? So at least do that high level review of that summary. Hopefully it gives you that summary. You don't necessarily have to dive into all the tax forms. I know that can be overwhelming for people, but at least do that high level review. Okay, now I'm all over the place. What's the next one? Next one, do a review of your accounts to make sure you've captured all expenses. I cannot tell you how important this is. And here's the thing. So number one, this is why you need a good accounting system. I always say this, why you need a good accounting system, because it'll track this stuff. But there are always expenses that get missed. I don't often use my personal credit card for business, but my personal credit card has significantly better travel benefits and insurance benefits and whatnot. So when I travel for business, I use my personal credit card, which means that anytime I come back, I then have to make sure I record those expenses that went on my personal credit card into my business's accounting system and reimburse myself for them so that they get tracked as business deductions. And I'm telling you, there are always ones I miss. There will be a cab ride here, or, I paid a bag fee, for my luggage there, or there was a meal that I didn't, I forgot about or whatever. So it's a great time to just go through. And I actually will typically I obviously go through my business stuff. But if it's in my business accounting records, more than likely it's going to make it on my tax return. What I really go through are my personal credit card statements and bank accounts. Again, not that I have many transactions there that are business related, but I usually have some, and those are the ones that tend to be missed. All right, Naomi says, how do I keep an LLC income separate from personal income? If there are two members, does it become taxable as its own entity? Okay, so that's a bunch of questions. All right, so good questions. So let me do the second question first. So there is, I'm wondering if I can find it quickly. I don't know if I'm going to find it quickly. There is a handy dandy little chart on the IRS website. I'll try to find it for you that basically helps you understand how your entity gets taxed. Now, if it's a single member for everyone, this is for everyone. If it's a single member LLC, meaning one member in the LLC, you, then it is by default what we call a disregarded entity. And you're in Ohio, that helps. It helps maybe for other things, but actually this is a federal level thing. I'll talk about state in a second, but this is a federal level thing. So single member LLC, disregarded entity, meaning everything flows up to your individual tax return. Now, it changes a bit if you have two members. So when it's a multi-member LLC, you have a few options. You can be treated as a disregarded entity. You can be treated as a partnership as well. I'm not going to go into all the ins and outs of that right now because it kind of depends on everybody's individual situation. But the bottom line is, note that you have those options. And so yes, if there were two members and you were treating it as a disregarded entity, the profits and losses from the LLC would flow up to each member. And actually it would be the same if it's partnership too. It's just that if it's a partnership, the partnership does file its own tax return. It doesn't pay tax at the partnership level on most things, but it does file its own tax return. And then each partner gets a K1, a Schedule K1, that basically says this is your percentage or this is your portion of the profits and losses, and you report those on your individual tax return. Now, regardless of any of those options I've just talked about, you asked, how do I keep an LLC income separate from my personal income? So help me understand in what context you mean, because on the tax return, LLC income, partnership income, well, those are the two that would matter to all of you. Those get reported on Schedule C, okay, which is your profits or losses from business income, basically. And so on Schedule C, and again, if you're using like a TurboTax or an H&R Block, they just ask you these questions and fill it out for you. But if you're doing it yourself on Schedule C, in fact, let me see if I can pull this sucker up. On Schedule C, you would write at the top, like, this is the name of my LLC, and this is what this income is for. Your personal income, if you've got wages from, wages from a job, or if you have jury duty income or investment income or whatever, that all is on different forms of your personal income tax return, the 1040, and it all goes to the first page of the 1040. So my goal is LLC is standalone and owner draws income as applicable. Yeah, that's totally great. So here's the thing, even if your LLC is standalone, which it should be, your LLC is its own entity, the LLC does not file its own tax return. The income, the profits and loss from an LLC are always gonna flow up to your personal tax return. That's normal and that's okay. There's not really a way around that unless you want it to become like a C corporation. So, but let me just show you this real fast. I think this will help. Hold on. I'm gonna screen share in 1 second. So let's see if I can do this. It would be good if I stopped sharing my screen. There we go. Okay, so Schedule C. Okay, hopefully you guys, let me make this super big because I can't see this. Okay, so this is Schedule C. This is 2019 Schedule C. So profit or loss from business. You would fill out this is a form that's part of the 1040, which is the individual tax return. Notice how it says Form 1040 up there. So you would basically fill out one of these for every business you have. Now, if you are an LLC, you fill it out for your LLC. So you put the name of the LLC here. Over here, you'd put the EIN for your LLC. If you don't have an LLC, if you're just a sole proprietor, you're going to use the same form. You're just not, it's not an LLC. It's your business. And basically, this is where all that info goes. So you've got all your income up here, your income section. You've got all your expenses here. And then if you come down, I'm skipping over all the details here, but if you come down, you get to this net profit or loss. Now, here's what you do with that net profit or loss. This is your business net profit or loss. Is you, hold on. I have to switch screens. Is you go to, where is it? No, not Schedule C. We want test 1040, Form 1040. 1 second. Oh, bear with me. I wasn't getting it in the tax forms, but I do love me a tax form. So, now I don't know why it's not working. There we go. Okay. All right. So then you would take that number, let me make this bigger, and you'd bring it over to this. This is the 1040. This is the individual tax return that every individual files. And you'd bring that sucker over here to, where is it? They just changed this form and it always throws me off. It goes in, yes, it goes here in 7A. Because actually they added this funky thing, and I do see your question, Naomi. I'll get there in 1 second. They added this funky thing called Schedule 1. Are you guys like totally confused now? I think they made it more complicated, but they didn't ask me, so that's fine. No, I don't want to stop my screen. I just want to share, and I want to share a different thing. They added this form called Schedule 1 that is basically additional income. And if you notice here, it's right in front of me, business income attached Schedule C. So that number from your Schedule C is, let's say it's 20 grand. It's going to come over here. You're going to drop it here on schedule. This is Schedule 1. You're going to drop it here. And you can also put like alimony, if you've got rental real estate, unemployment compensation. This is going to be really important for everyone this year. Getting unemployment, you're going to need to file, or you're going to need to put that on Schedule 1 of your 1040 next year. So anyway, all your other forms of income here, plus adjustments to income. So these adjustments used to be on page 1 of the 1040. They're not anymore. They're here now. So your IRA deduction, your student loan interest deduction. By the way, this is an important one. Pay attention. It'd be good if I highlighted the right one. Deductible part of your self-employment tax. That's the 50% of your self-employment tax you get to deduct. So all of these come here, right? Get your adjustments to income. And then you bring these over. Let's go back to our 1040. You bring these over to your 1040. Actually, I'm just going to do entire. There we go. So I don't have to keep switching back and forth. Bring these over to the 1040 and you would put them, where is it? Right here, other income. So it all gets combined in the end. Okay. So Naomi says, can you include multiple LLCs? You sure can. You're going to have one Schedule C for each LLC. Yeah, I want to make sure I set that right. There's a lot of C's. So you're going to have, you're literally going to do this Schedule C. You're literally going to do one of these for each LLC, and they all get attached to your return. And then they all of those LLC, all of the income from those LLCs will pop up and combine here on line 3. So if you have 20 grand from one and 15 from another, and 10 from another, you would put $45,000 here. You'd put the combined amount for all 3 there. So hopefully that makes sense to answer your question. And let me know if you have any more questions. I'm happy to come back to those. So bottom line, we got off track, but that was a good off track because I think that was helpful. So that tip was to review all of your accounts, make sure you've captured all of your expenses. And actually, it was a good off track because let's come back here. This is Schedule 1. Yes. It's not just your business expenses that you need to think about when you're doing your taxes. It's not just what I talked about, where if you use your personal credit card, or you might have forgotten to put something in your accounting system. It's also these other deductions that may or may not be business related that are really important to make sure that you pay attention to. So, and in particular, the ones that fall on Part 2 of Schedule 1. And again, not all of these rely on you having a business. Some of these are just regular deductions for everybody. But, if you've got a health savings account deduction, we talked about the deductible part of your self-employment tax. So remember, self-employment tax, because you are now your own boss, and Naomi, this is for you too, because you are doing an owner's draw. This is definitely for you. Because you are now your own boss, whereas before, if you had a 9-to-5, you paid some payroll taxes, right? You paid Social Security, you paid FICA, whatever it may be. but your employer also paid some. You actually each paid the same amount of money. Well, now you as the employer, business owner, has to pay that full amount. It's about 15.3% of your profits of your profits that you have to pay. But you get to deduct half of that. Your employer, when you had that 9-to-5 job, got to deduct their portion as well. You get to do that too. So that goes here. So you want to make sure that gets done. If you've got any kind of a self-employed retirement plan or self-employed health insurance deduction, you want to make sure that gets on here as well. I'm going to skip penalty on early withdrawal savings. Interestingly enough, may not be applicable in 2020 because they've waived some of the rules. So if you took money out of retirement in 2020 because of COVID, that actually you may not have a penalty, but that's besides the point. If you pay alimony, if you have and if you put money into an IRA, if you had student loan interest, that qualifies for a deduction. If you pay tuition and fees. So these are all things in here that are good to pay attention to as well. They're not necessarily related to your business. Some are. But they can be pretty big adjustments to your income. So just something to note there. But all right, let me stop my screen. Let's go back to what's next. What's next? Oh, don't forget untracked income. Now, this is the one that nobody wants to talk about because this means you pay more in tax. But this comes up a lot, especially for folks who maybe do a lot of stuff in cash. Let's say maybe you get paid a lot in cash. Or who might get money from a lot of different sources. So maybe you get money from Shopify and Kajabi and Etsy and Square and what else? There are probably others. Maybe you drive Uber and you got a lot of things going on. It's easy in that situation to forget some of your revenues. And that's unfortunately, it's good in the moment because you're like, oh, I didn't owe as much as I thought I was going to owe. But it's potentially bad down the line because if you get audited, then you're going to pay some pretty big fines and interest for not reporting that income and for not paying tax on it. And remember, most of that income, with the exception of cash, most of that income is probably getting reported to the IRS by someone else, by the person who paid you. Not always, but if it's paid through like a Square or Stripe or PayPal or something like that, they have reporting requirements as well. So if you fall into the rules for them for reporting that income, they may be reporting it. So oftentimes you may actually get a notice from the IRS that says like, hey, it basically is saying, hey, these guys over here told us that they paid you X, but we didn't see that on your tax return. So, WTF. So just make sure you don't forget that untracked income. It's not a fun one, but it's an important one. Okay, I feel like we already talked about this, but keep good documentation. And I don't just mean like keep your receipts or keep your invoices. I also mean keep good documentation about where you got the numbers for your return. I cannot tell you how many times when I first started doing our taxes, I would again, this was me trying to get it all done. And I would sit there and I'd have the big stack of receipts and I'd be adding everything up and I'd put the number in. And what I learned over time, especially as I took more care to review my return, is that's not a great system. I like having kind of a middle person in there in the form of an Excel spreadsheet where I list out all of the receipts that I'm using. Or if it's for my business, I have got my accounting records so I can go in and see exactly where I got that revenue number from, exactly where I got that expense number from. And the reason why, this comes up for me a lot with charitable contributions. This isn't a business specific thing, but I think it's a good example. I'll literally sit there and I'll go through my letters I get that say thank you for donating, and I'll go through my emails that say thank you for donating, and I'll just, I'll add the number up, like on my little calculator here, I add it up. Well, the problem is then when I go back to review my return, let's say I find another letter and I'm like, oh, I don't know if I included this or not. I have no way of knowing unless I start from scratch and add them all up again. So I just pull out a quick Excel spreadsheet, jot them all down, the name of the charity, the number, and add them up. And that way I've got that documentation. It's nice for me when I review. It's also great if the IRS ever comes in and audits me. Notice there's a theme here, because then I can say, here's my Excel spreadsheet. This is exactly how I got that number. And let me just tell you, the benefit of being organized and being prepared if you ever get audited cannot be discounted. Because even if you messed up, let's just say you messed up, you were wrong, you misunderstood something, whatever. If you are organized and you and the agent can get to that issue quicker, more often than not, you're going to end up with fewer penalties, with fewer issues, because the agent appreciates the fact that they didn't need to waste all their time digging through your paperwork. So even if you did make a mistake, it's great. And frankly, even if you didn't make a mistake, just coming and being organized usually gives them a good signal that you probably didn't do anything wrong, or there probably isn't a lot to find here. But if you come to them and you're a hot mess, they're going to be thinking, yeah, I bet I can find some money here. I bet there are mistakes here. So it's always good to keep good documentation. Okay, last one, because we did the last one before since I went out of order. So important, file even if you cannot afford to pay. I cannot stress this enough, and this is especially the case this year, but it's always the case. Please do not file your tax return. So a lot of people don't realize this, but there are penalties for not paying on time or at all. But there are also penalties for not filing on time. And when I say file, I'm talking about like your tax return form, the forms I showed you. So, and I've had so many people I've talked to say, well, I didn't have the money, so I just figured I'd wait to file. No. Like, I'm going to lose my mind. Please file, even if you cannot pay, for a couple of reasons. One, because I don't want you to incur the penalties of late filing your return. They're expensive. Please don't do it. But two, because the IRS actually offers options to help you if you cannot pay. And this is the same for anybody who, I think Jenna asked about quarterly tax payments. Hey, if you're paying your quarterly taxes every quarter like you should be for your business, that's awesome. If you're not quite there yet, I get it. For some of us, it takes a little bit of time to work up to that. But what can often happen is when people don't pay their quarterly taxes, it's because they don't have enough money coming in. They're not setting the money aside. Then April comes around, or July this year, and they don't have enough to pay their tax bill. And so they freak out and they just, okay, I'm just going to ignore it. Worst thing you can do, because the IRS has options in place to help you out. The most notable option and the easiest option is they actually do installment agreements. Now, you will pay a little bit of interest. You will pay a fee to do an installment agreement. But let me just tell you, the IRS installment agreements are actually pretty reasonable. They give you, I think it's something over like anywhere from 3 to 7 years, depending on how much you owe. And you have to make a minimum monthly payment, but it's not horrible. So if you cannot afford to pay, number one, file. Number two, consider that installment agreement. Even if you don't want to do an installment agreement, maybe you just need a month. You just need a little extra time. Still file. And then pay whatever you can. That's one of the things they actually care about the most, is that you pay something. So I will also say that. So even if you cannot afford to pay your entire tax bill, file and pay something, because that is a good indication to them that you're trying to do the right thing, that you're being diligent, and you will pay eventually. So pay something and then figure out when you can pay the next amount. But the worst thing you can do is to shy away from the IRS, is to hide from them, is to just hope it goes away. Because let me just tell you, it's never going away. I promise you. Okay. The IRS is not going to just say, we're over it. Well, we don't care anymore about her debt. It's fine. No, they're going to come after you. So make it easy on yourself. Limit the penalties that you're going to pay. File your return on time, no questions. And then pay as soon as you can, and pay as much as you can as soon as you can. Now, I want to go back to something Naomi had actually mentioned, because she's in Ohio. Everything I've been talking about today, well, not everything. I mean, all the tips are applicable at federal or state level, but the specifics I've been talking about are federal level specifics. Every state does this a little bit differently. Now, a lot of states, and I'm talking about deadlines, I'm talking about what the forms look like, I'm talking about how to report business income. For the most part, a lot of the states adopt the federal rules in this stuff, but there can be differences, and some states don't. So what's really important, like Naomi, you're in Ohio, is I would go to the Ohio Department of Revenue's website. They're going to have, I guarantee you, a whole section on tax, and I would look at their forms. It's probably going to be very similar, but I would look at their forms, I would look at their rules. Every state is different. That's why I don't get into the specifics of each individual state, because every state is different. And frankly, they're always changing. However, what a lot of states do, and I kind of mentioned this a second ago, but what a lot of states do is they'll start with federal, meaning whatever your federal numbers are, they'll come over to your state return, and then just if the state has any adjustments, I'll make them there. So most of the time, you're not completely reinventing the wheel when you're doing your state taxes. But that's not always the case. So I know that's like a very vague way of explaining state taxes, but if I started to get into state taxes, we would be here for years. So I'm going to leave it there. What other questions? Any other questions? I see we've got a few people watching live. So let me know what other questions you have before I hop off. I'm actually shocked that this only took us 35 minutes, especially since we dove into the tax forms. The minute we went into those tax forms, I was really worried we were going to be here for an hour, which is fine for me, but I don't, talking about tax for an hour is not everybody's joy. So, okay, I'm going to leave it there. I don't see any more questions. I hope you all are having a fabulous day. Before I go, hold on. I have something fun. I always have something fun, right? Is this it? Nope, wait. My like templates for the screen are so small and I'm wearing my glasses today. So I'm like, I can't see anything. Oh, here we go. I think this is it. Yes, that's it. Okay. Here's what I have fun. Some of you may know that last month I opened up for the very first time ever my membership, the Badass Action Takers. I am opening it up again in 3 weeks, the end of July. I'm super, super pumped. We're having so much fun in there. It's a great opportunity to really master the money in your business, to grow your business into a profitable and scalable business. It's a blast. But here's the thing. I offer everyone who's on the wait list for my membership a super special something. This time around, when I opened it up last time, what did I offer? I think Jenna was on it. I can't remember what I offered. I offered like 4 freebies. And it's so funny because I was only going to offer like 1. And then I was just so excited. I was like, I'm going to give you this. I'm going to give you this. I'm going to give you this. So there's benefit to being on the wait list. You can hop on the wait list by going to megkwheeler.com/action, and you will get an email before I open it up, and you will get those freebies. I give them to you no matter what, whether or not you join the membership. It's like the worst sales tactic ever, but I give them to you no matter what, so it's worth being on that wait list. So megkwheeler.com/action. And Jenna says, do you have any videos for quarterly taxes? So that's a great question. You know what? I don't immediately, but let's talk offline because I saw your comment about the quarterly tax workbook and I want to do one with you. I want to walk through it with you. So you and I can chat separately on that. And actually, that's a good point anyway. So when you buy my quarterly tax workbook, we have talked about this. Admittedly, we have never done it. We've talked about doing a tutorial video for that. So Jenna, thank you for that reminder. But let's you and I talk separately after, because I will definitely get you some help. But if you also have specific quarterly tax questions, let me know as well. We got to do a whole nother. And I have done Facebook Lives on quarterly taxes, I should say. So let me see if I can go back and find those Facebook Lives, but not specifically with the workbook, which is, I'm guessing, your question, since I saw elsewhere you had asked me about that. So, all right. And yes, they do take a minute to get to me, the messages, which is why I try to wait. But I'm also sometimes bad at looking over on the side to see if you've put comments in there. So, okay, I think we're good. I think that was all the questions. If you have any more questions, drop them in the comments here. I will get to you. Otherwise, I will be doing, as always, my Q&A, weekly Q&A live in my free Facebook group, The Badass Moneymakers, which you can join by going to megkwheeler.com/group. And then I will be back here next week with another Biz Money Live. Have a good one.